Welcome. Markets have crashed. I want to get out of this market or this investment is a thought that is going on in a lot of people's mind today. What needs to be done? In the last week, we had a couple of events starting with the crude oil war by Saudi Arabia, followed by travel ban between Europe and USA by American government, and along with that, visa ban for travel to and fro from India, coupled with the global meltdown, brought the bull market that started in 2017 to a halt for our country. The bull market, which started in 2013, came to a close this week. The market has changed direction. Sensex has lost 20% from its peak and regained about 15% towards the close of the week. This was one of the historic events that has happened in our market. What went wrong for the market to go down 10% and recover 15% from its bottom in a single day? Nothing was so bad in any economy across the world. It was all created by the fear that media did to the markets. There is fear all around today. Along with the coronavirus scare, market crash has created panic in the minds of people. They are confused, not knowing what to do. Should you move out of your investments, take the losses and get out? For sure, yes, a big yes. If you don't believe that India will exist on this planet 5 or 10 years down the line, or you don't believe that man will exist on this planet for any number of years in the future. If you don't fall into this category of misbelievers, you have a belief that you will live your life 10, 20, 30 or any number of years further in this world, then this is a golden opportunity for you to grab investments 20% cheaper. Markets will never go down. It will only keep going up, up and up always. In the process, it will have some big corrections once in a while, which are rare occurrences. When that happens, it is the biggest opportunity to multiply your investments as fast as you can. Who will fear and get into panic? Those who have come into the market expecting their investments to go up every day. Yes, every day. They want their investments to be up, going up always. That can only happen in fixed deposits, while fixed deposits don't give the big returns that stock markets give. While to churn out that big returns, market needs time. When these impatient investors see their investments not going up, they get into fear and panic and create a mess in price in the market. We can see in this graph of Sensex here, it is for the last 20 plus years. It has gone up from 3,000 to 35,000 today. Before reaching 35, it had been at 42,500. It did not go up in a straight line. It had jags down, while it has never reached to the price where it started in the past. When market starts to go down, people get into panic, thinking that it will go to zero. Once all those people who have this unwanted panic and fear move out of the market, it turns up and reaches for a higher high. Stock market is an asset which keeps going higher and higher on a regular basis. In the process, it attracts people with lesser patience and more expectation. This is where greed gets built into the system, and it brings in huge flow of money into the market. At some level, this flow of money slows down and market takes a breather. It takes time to reach for a higher high. When something is not going up, it either stays flat or starts going down. When in this situation, these people who have less patience see that their investments are not going up, they get into panic. They start selling their investments, and that selling brings a tick down, which other investors who are also impatient get into panic and sell further. This creates a ripple effect and a sell-off happens in the market. Till the time these weak hands move out of the market is going to keep going down. That is exactly what is happening in the markets today. Market has fallen 20% from its peak, washing out all the weak hands in the market today. For those who have a long-term view, have a long staying power, and have a confidence that we will see beautiful growth coming up in this world in the future years, they have the opportunity to grab their dream at cheaper prices. Sometimes we get our dream at throwaway prices. Nothing has fundamentally changed for our economy, for that matter, even the global economy. Only that all these impatient, weak hands that is there in the market, selling the market, is creating this fall. World has 7.2 billion population today. Of that, 1,40,000 people are infected by this coronavirus. In that, 5,000 people have died today. What is the percentage of the impact? It is 0.000019%. That is 5 zeros beyond the decimal 19%. Is this anything to fear? Let me ask a question. What is the chance that one of your family members will have this virus in the coming days? Maybe 1%. That too because you would have heard that someone in your neighborhood had the disease or someone in your city had the disease. So far, we have had only 2 deaths due to this virus in our country. In the last year, we had 31 deaths due to flu in India. Did we fear or panic? We didn't even know this number, know that what has happened in the country. While that being the case, why so much of panic today? Media has created a hype out of this issue. So much hype has got created that travel is banned, movie theaters are closed, malls are closed, pubs are closed, metro has stopped working in Delhi. When we hear all this panic getting created by the government, which is again because of the media hype that is getting created, we get to coil down, isn't it? Look at the impact that these shutdowns will cause on the businesses and the economy. Airlines will report losses, hotel and tourism industry will report losses, people who are dependent on the tourism industry will not have income, or probably their employer should pay them from their pocket, creating losses. Shops in malls will lose business, theaters will not have business. It is going to be a chain of impact. This will slow down and companies will show losses for next 2 quarters, which will bring further sell-off because of the systemic impact into the system in the markets. Markets are going to be down for a long time now. Once all this fear is subsided, it will start moving up and reach for a higher high. By the turn of this decade, that is by 2030, Sensex is going to be at 1 lakh. Yes, 1 lakh. Now we are at 35,000, which means a 200% growth opportunity in just 10 years. Where on earth can we get such a big opportunity to grow our savings? Until last month, it was just 150%. Media created a mess throughout the world and brought in a bonanza of another 50% gains. It is time to grab this opportunity. The next question is where to invest. As the market was melting down last week, we had several calls from investors asking us if we can buy Reliance at this price because it is dead cheap. Blue chip stocks are available for a dead cheap price. Can we grab them? Again, this is greed. It's because of the recency bias. We have seen Reliance shares quoted at 1,600 rupees per share just 2 months back, and today we are seeing the price at 1,000 rupees. It's mouth watering. If I grab it, I can make a fast buck, say near 100% in few days. That is not going to happen. There is a big damage that has been created in the market. It is going to take time to recover and get up for the next bull market. It will take a minimum of 6 to 12 months to go up. It can even stretch to 15 plus months before the next rally starts. Investors have a big opportunity if you come in for long term. If someone is coming for short term, for sure they are going to burn their money. There are a lot of stocks that are available pretty cheap today. The list is big, buy them for long term. Since we have talked more about ITC, let me take that stock as an example. There are a lot of other stocks. If we talk about all of them, there is no time. So for ITC, it has made 11,250 crores of profits in the last 9 months. It has an average of around 3,500 crores profit per quarter, which means this year it will end with a 15,000 crores profit. And ITC's capital is 1,230 crores. In this company has a policy of giving out 50% of their earnings as dividends every year. It's because ITC does not have any promoters. 75% of the company is owned by foreign investors and institutional investors. 15% is owned by mutual funds and insurance companies. 10% by individual public. And all of them want to take out their profits made as their share of profit. That is why dividends are being given regularly. 50% of 15,000 crores is 7,500 crores, which means 600% on the capital. ITC's face value per share is 1 rupee, which will give 6 rupees as dividend this year. Market cap of ITC today is 2 lakh crores. It was 3 lakh crores a year back. ITC has a book value of 45 rupees per share and the stock is quoted at 160 rupees a share today. At 3 times book value, you can buy this stock which gives 3.5% dividend income per annum and the business is growing. Will you stop consuming Ashirwad Atta today? Will you stop eating or buying Sunfeast biscuit? You go to a supermarket and reach for the Atta section. These shelves are painted red with packs of Ashirwad Atta. Go to the biscuit section. Next to Britannia, ITC Sunfeast claims the highest shelf space. Supermarkets won't stock these products if people are not consuming it. ITC today is available at pretty cheap price. Buy it for long term. If someone thinks that I will buy ITC today and sell it next week with 50 rupees profit, it will not happen. There are stocks available cheap. Be selective and stay invested for real long term. The best place to invest is mutual funds. Again, for long term. What is long term? Anything above 5 plus years. Have it for more, you make more money. Next, SIPs. It is a golden time now for SIP investors because we will get 20% more units for the same regular SIP amounts we invest. It is because market is available cheap now. And it is because of all these accumulations that we make when the markets are going down that makes SIP investments give big fat returns on our investments. Even here, people think to be smart. They will stop their SIPs when the markets are going down, thinking that they will punish the market for not giving them money. In turn, it is the investor who gets punished and not the market. They lose the opportunity of big returns in the short term. That is, I don't say short term returns. This grabbing units at the lower level helps their overall investment give higher returns in the long run. Don't stop your SIPs. If possible, increase your SIPs because this downturn in the market is going to stay for a long term, at least minimum of 1 year. If you have surplus funds, push that money into the mutual fund investments. You will be making higher returns in the longer run. Pick up stocks that are available cheap and again for long term. For stocks, when we say long term, we mean decades. Hold them for longest possible period. They become gems and give you continuous returns. Think ITC, company is growing at 7%. Next 10 years, today 6 rupees dividend will be 12 rupees dividend. Your investment is 160 rupees, which is you will be making around 7 to 8% dividend income alone from this stock. And when the book value doubles from 45 to 90, stock price also is going to be double. 150 to 300 rupees bare minimum. So your investment is double, your returns, regular returns on it also is going to be very high. So don't panic when the markets are down. I will give you a simple tip. Shut down from the media. You will not die. In fact, you will have a healthy, happier life because there is a lot of peace of mind without the disturbance from the media. So accumulate wealth, enjoy life. Markets are going to be up and down always. In the long run, it is only going to be up. One word of caution. If you are weak at heart, stock market is not the place for your investments to be. You move your investments to fixed deposits. Even if your banks default, any number of banks default in our country, government will come on bailout through taxpayers' money. Stock market will be creating wealth to investors who pay the taxes, which will be used to pay back the impatient investors for their through the bailouts that governments will create. Thank you.